how to find the right trading exit for your trading strategy. Most people concentrate on the entry but forget about the exit. If you don't have an exit scenario and the market turns, then your trade totally ends in a minus trade instead of a win. That's the reason why the exit is at least as important as the entry. Without your strategy will fail. For this reason, in this video, I will tell you exactly which options you have and which ones to pick best for your strategy. So by the end of this video, you will exactly know how to catch not only the short trades, also you will be able to catch the big movements with the big profits. So stay tuned, we will start right away. As you see, I've drawn in here the major support and resistance, and zooming out you will see that we are in an ongoing upwards movement, and here are the major support and resistance area which the market is in at the moment. And of course here is the last high, so it's also an important area for us. So we want to take a long trade here now. There are different entry options here that we won't discuss in this video since it's all about the exit here. So entering the market at this point, we have different options. Of course, you should always place a stop loss. Top secret tip here, always leave enough space. Don't put the stop loss too close. It's always a bad idea because if the market needs room, it will catch your stop loss and then after probably continue in your trading direction, but you're not in the trade anymore. So also you have now the option to use a target. For example, below the next major support and resistance area, a little below, because you know markets don't always act as exact, so it will probably get into this area. To make sure your target gets caught, you will place it a little below that area that you have drawn in. Of course, you can use different targets. You could, since we're in an ongoing upwards trend, use a second target later on. For example, before we had a risk-reward ratio around 1.5. So, for example, you could place a second target at 2.5 and another one, for example, at 3.5. So in this case, you would have 3 targets, 1, 2, 3. That is one option. This makes sure when the market comes into this direction, it will definitely end in a profit, no matter if the market turns and bounces back from this level and decides to continue further down. But if it decides to break through this level and continue its way up, then you're still in the trade and are able to catch more profits. So that's the option of a take profit. Option number 2 is to use a trailing stop. That way you can define exactly in which range the stop loss will follow the market, and you will make sure that if the market drops further down, then you will save up your profits. It can work really well, just depends on your strategy and your settings. The other option is to, of course, move it manually. If the market continues up, then you will move the stop loss always below the last low after the market made a new high. So here, for example, the market is not making a new high yet, so we don't move the stop loss yet below here. We wait. If the market has made a new high, then we can move the stop loss below here. After that one, we will wait still. And if the market is up here, then we can move the stop loss below the last low. And of course, always remember to leave space. If the market makes a spike down and hits your stop loss and then continues further up, you will regret it. So always make sure to leave enough room. Guys, I've seen it so many times happening with students. They just don't want to give away too much of their profit, but in the end, they give away even more of the profit if they don't follow this rule. So always keep that in mind. Of course, there is another option for a stop loss. You can use an indicator-based stop loss. Indicator-based. This means you use, for example, an indicator like the ATR, for example, I've done a separate video just on that topic. So if you're interested in using an indicator-based stop loss, then jump to that video and I will explain you in detail how this works. I really want to point out that there are really different options, and which option is best for you is always depending on your strategy. It has to fit to your strategy, it has to fit to your own trading style, so that's not always the same solution for everyone, because you have to feel comfortable in using it. Otherwise, at some point you will stop following the rules and then your whole trading strategy will fall apart along with your trading profits. That's the reason why I want to make sure with this video that you know exactly which options you have and how it could look like, so you can decide with this content which one you will pick for your successful trading strategy. So let's take a closer look after we know now how the market developed. And you see our take profits, all three of them got hit. But as well, if you would have used your own strategy with moving the stop losses below the last low after a new high, then you could, of course, have moved your stop losses below the last lows. So here it's an ongoing movement up in this direction. This is not a pullback within this movement yet. If you have trouble in telling the difference, then I would recommend you to use the Fibonacci retracement, apply it to the chart, and here you see that the pullback came around the 61.8 line, so still in the range where the most pullbacks occur. So use that tool if you're not sure if this is a pullback yet or not. This way you know exactly that these are not really strong pullbacks yet, and you know to wait for this one. That way you make sure you're still in the trade when the market continues long afterwards and you see the potential isn't ended yet. So this is one of my favorite stop loss movings because we take the big movements. This is more of a swing trading strategy. If you want to use the day trading strategy, then I would recommend more the take profits, so that way you will always be in big profits. We have a risk reward ratio of 3.5, so a really great profit. But as explained already, it always has to fit to your strategy and to your own trading style. That's it for this video. If you have any questions regarding this topic, leave me a comment below. And if you want to know more, learn more, and trade with me, then you will also find below this video the link to my website where you can find all information about it. I will be happy to see you there, and then at the latest next week with the next video. Bye bye.